Welcome to the Live Squawk podcast, where professional traders, investors, and market insiders get the unfiltered insights that matter most. Stay ahead of the curve with expert interviews and exclusive market commentary. Hello, and welcome to Live Squawk's Market Talk Weekly Review on Friday, the 31st of October 2025, otherwise known as Halloween in some parts of the world. This is where we try and break down the key stories of the week gone and the implications for the markets. We'll also take a look at the week ahead, and we'll try and give you a heads up as to what you should be looking out for. I say we because every week I'll be joined by market experts in their field. And this episode, I'm joined by a regular contributor and long-time trader, a friend of the show, Ryan Littlestone of Forex Analytix, and actually a co-founder of Forex Analytix, Stelios Kontogoulas. Welcome to you both.
Afternoon.
Hello,
Afternoon.
Nice to be here.
Great. Before we continue, just a quick disclaimer here. The content provided on this channel is for informational and educational purposes only. We're not licensed financial advisors, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We're not responsible for any losses or gains that may result from following the content on this channel. And with that out of the way, let's crack on and take a look at the week gone, really. There's been quite a lot to pack into this week. I suspect you guys have been fairly busy with everything going on. Ryan, we'll start with the FOMC rate decision, which was obviously the pivotal part of this week, the most important release of the week. What did you make of what we saw?
It was a bit of a surprise, really. We all wondered if they were going to sail through the shutdown and just keep going as they were with rates. But they've got as much indecision at the moment as the rest of us had regarding the data. So putting a bit of doubt on the December rate cut was obviously the big news. The QT announcement was expected, whether it was coming this month or next month or December, was neither here nor there. But yeah, it is a surprise and it isn't a surprise, really. We've had dissent in the ranks in the last FOMC, so no surprise to see it again in this one. But overall, they need to be careful. You know, we might get some data if the shutdown ends that shows a vastly different economy than before the shutdown, and I think they've got to protect themselves against that. So, bit of a surprise for the markets, but probably not that much of a surprise if you look at the bigger picture.
Yeah, probably a prudent step or a prudent course of action. Stelios, do you agree with that? Is that something you concur with?
Yeah, I do agree, and it's they're caught in a situation where it's tricky because we have equities at all-time highs, we have inflation which is still above target, and yet they kind of have to try and preempt what's going to happen, and that's why they cut 25. But again, Powell spoke the hawkish talk. He wasn't dovish for sure, so he wants to try and keep control over the situation, but with lots of debt maturing at low interest rates, and now having to refinance it at higher interest rates, they cannot have rates too high. So they're kind of caught in two minds in the situation here.
Just in terms of, I read somewhere that JP Morgan's one of their commentators came out and said that he thinks that Powell's lost control of the board. I think it was a bit drastic, but again, do you think that's the case? Do you think, like, with the dissents that we're seeing now and the diversion, because he said there was quite an animated conversation really about the monetary policy path. Do you think he's lost control, or is losing control, or is that just be hyperbole in the scheme of things? People are going to dissent. This is what a board's for, to have open discourse. Stelios?
Yeah, there are going to be dissent. The problem is that there's a lot of, the Fed is not supposed to be political, but there is definitely influence, and Powell is trying hard to keep things under control. I don't think he's lost control, but there will always be dissent. So to answer your question, I don't think he's losing control. I think it's a bit too much to say that.
Yeah, it should be healthy. That's what you want, really, isn't it? You want to get all opinions out. Well, unless you're sitting at the end of the table like Steve Myron, where you just want 50 basis point cut and nothing else. So yeah, it was interesting. I think the market reaction told you a lot. Risk assets held relatively steady after the initial sort of move and cut and thrust, but we did see some yields on the twos and tens, or twos and fives really, I think, move double digits and move up double digits. So there is some repositioning, and obviously, like you said, Ryan, it obviously surprised more people than initially thought.
Yeah, we've also got month end at the moment as well, so we're going through that. But it's just this is the state of markets are in at the moment. Beginning of the week, the dollar was looking very weak, and now it's smashing up against everything. So we're having these pendulum swings between these events. I think if this dollar rally continues into next week, we're probably pushing into sort of overdone territory for the news, because at the end of the day, the Fed still want to get rates down, as Stelios mentioned, for all the debt, and they just don't want rates this high. So keep an eye on that end game as long as the data says that needs to happen when we finally get it.
Yeah, fair enough. Again, sticking with the US, we saw that US-China trade accord for a year at least. In terms of where this story goes, is it just this thing is just going to drag on for the whole of his sort of tenure of Trump's presidency?
Yes, I think it is. We again, it's another pendulum. We're going to swing between when things are going well and then something happens and things go sour again, and he decides to crack the tariff whip once more. I do have a worry that maybe, I mean, they've come across okay this time around, but I've got a feeling China are perhaps not going to be as willing to toe the line on certain things. They're going to be quick to respond if Trump does something against them. I mean, that whole thing with a 155% tariff kicked off about port fees that were put on.
Yeah.
So that seems a fairly innocuous thing to get into a big trade war about. So I think we're going to see more of those kind of episodes, I think.
And Stelios, in terms of how you position yourself as a trader, how do you protect yourself against these sort of? I guess this was a known unknown really in terms of their meeting, but just in terms of how you trade Trump from maybe a medium term position, how do you protect yourself?
Well, it's very difficult with this volatility, because Trump is a very different president to all the rest that I've seen. So unfortunately, this back and forth has been going on, and it will continue. So how do you protect yourself? I personally have been scaling my trading to smaller sizes in the past because of the volatility, and that's what I do. And the problem with US and China at the moment is that for me it's very difficult to understand who has the advantage at the moment, because there's a lot of dependency between them. One has the upper hand in terms of raw materials, etc. The other one is the biggest buyer of products, right, by China. So it's a very difficult situation to assess. So for me, I'm just trying to take it a bit easier, a bit slower in terms of trading when all this is going on.
Sure. Trump's been in Asia this week and has made or cemented trade deals with some of his Asia partners. We also saw a Bank of Japan interest rate decision. They kept rates on hold as expected, I guess, but there were some people starting to form an opinion that we could get an October move, but we didn't. But we're promised that there will be one still to come, a hike, that is. Stelios, I'll come to you first on this. Did you pay much attention? Did you expect much from the Bank of Japan decision, or you think it's another can-kicking exercise anyway, and that you have to play along those lines?
Yeah, it was as expected, and the split was as expected as well. So nothing new from there. I really didn't think anything surprising was going to happen. They say that they're going to be probably hiking. I find it difficult given the environment, and inflation is on target, but not by a lot. So again, another central bank that's going to try and talk the hawkish talk, but I think delivering, they're probably going to under-deliver. So, but to answer your question, I don't think there was any surprise on that meeting.
Well, again, there's talk that they'll wait now to the next round of the annual wage rounds that don't come through. Is it, Ryan? Is it January time, February time that they come through?
Yes, more so towards March, I think.
Oh, sorry, so even further out.
We get headlines now and again. We've already had some, I think, from Rengo a couple of weeks ago saying they were looking at 5% rises. So, yeah, I mean that was the key point that Ueda made, and something that we've been making here at Forex Analytix. That really the icing on the cake is going to be those wages. They've got inflation that's up above 2% and seems to be holding. They're worried about these cost push pressures, but getting wages positive versus inflation is their main aim. And he said, yes, we're going to wait for the wages, but we don't necessarily need to wait for the final numbers, which come at the beginning or the end of the fiscal year, March, April. They can see how the wage calls are going before making a decision. And this is the Bank of Japan. You can't. They're not like the Fed where you go, well, okay, we're deciding what's happening in December. We know, or like we did with this meeting, we knew the Fed were going to cut rates. There's a window for these guys, and you've got to look in sort of 6-month terms. So from October through to March, I think is their window for hiking. They might go in December. Wow, they could go in January. They're always such a cautious bunch. They don't care if they don't hike in December and hike in January. That doesn't affect them that much. Whereas the market, likes to circle a date and it likes to price a date. But these guys will go when they want to go. But yeah, we're in the window, and as I say, any time from now until sometime in Q1.
It is curious how you got Western central banks who seem to want to please the market and want to make sure the market's on side, as opposed to the Bank of Japan, which I guess needs the market to be with it, but just doesn't seem as desperate to want to play that game, if you like, with the markets, which is I find quite fascinating at times with the Bank of Japan, particularly.
Yeah, well, it's all this forward guidance, isn't it? Everyone's taking it on board, and now you have what we had yesterday, this week with the Fed. The market thing put its feet up. Yeah, they're going to cut in October. Yeah, they're going to cut in December, and because that's the guidance it's been given. And then Powell comes out and says, well, it's not a done thing, and the market has to reprice everything. So there's pros and cons to this forward guidance. The Bank of Japan just stick to their path. Yeah, we're going to hike when we're ready, basically, when we see enough data. But they're not moving in 0.5% terms. If wages is 0.1% 1 month and 0.2%, that's no big difference. So I think, the market will always want from a central bank and want to know exactly, and the Bank of Japan aren't the type to give it that quickly.
Fair enough. We had another North American central bank decision, Bank of Canada this week as well. We'll quickly over that. They cut by 25 basis points ahead of the FOMC, and did note the tariff disruption. They had a better clarity over tariffs with their southern neighbour, and appeared fairly happy to keep rates on hold for the time being. We won't go into too much detail about it, but anything out of that you found interesting or traded around, Stelios?
I did not trade it, but it's interesting because the BOC is another central bank which is cutting as inflation is higher than target. But then again, they are revising the GDP forecast lower for this year and the next because of tariffs, because of a lot of things. So they are also being cautious. And again, it's another central bank which always has a tendency to favor easing. It's just like the Fed, just like the other major central banks. Whenever they have to err on the side of caution on easing, they do it quickly. Whenever they have to go the other way, they do it slowly. So, but I didn't trade it, and I don't think there was any real surprise though on the BOC.
No, I think some people thinking that now that they're going to stay on hold for a bit longer, may have been a little bit more of a surprise, but I don't think, like you say, there wasn't a great deal in it. Something that wasn't a surprise and generally puts us to sleep most months it comes round is the ECB interest rate decision. They kept rates on hold. It was a very unspectacular, again, presser, I think, from Lagarde, in the respect that there wasn't really much that she could say. Did you take anything from that, Ryan? And Was it worth anything?
No, it wasn't worth much. I don't think the ECB think they're in a good place with inflation. They think they're in a good place with rates. They think they're in a reasonable place with growth. They are big to differ on that subject. Their risk now is being too complacent. I still think
Right.
if they don't see a decent pickup in growth going into next year, then we're going to see some disinflationary pressures coming in. We've already seen that over the last 6 months on and off with France, in the PMIs, that a lot of firms are having to cut prices, output prices, to try and drum up business. And I think that's going to be the case if they see weak growth into next year, that they don't see the economy bouncing, and then we're going to face another round of prices easing at the firm level. And I think that's going to bring another disinflation bout, which we know they get spooked by. And I'm still thinking that they're going to be cutting again next year.
Sorry, there was a sources story, I think, doing the rounds that some members did worry about that disinflationary effect. And again, so soon after the, keeping rates on hold, there's already that they reopening that potential narrative of cuts next year. Right, because we saw we got Eurozone GDP prelim data out as well this week, really. And I guess just quickly, briefly on that, how much do you worry about the French situation, Stelios, and how that may ultimately erode some of that? I'd say growth momentum, but I don't know if that's the right word. But how much would that erode the confidence in terms of investment into both France and the Eurozone? And does it hurt the overall picture, or do you think the other countries are picking up the slack, the likes of Spain, the likes of Italy at the moment?
And the likes of Greece.
Greece. Sorry. Yes, because it's had an exceptional growth rate.
After a decade of really bad data, we're having good growth. No, but to answer your question, I think France, they've had political issues for years and years now, right? I think the markets are kind of getting used to the situation, which I know it's a silly thing to say, but I don't think that the situation in France is going to really move the markets that much in terms of the euro. And as you said, I think other countries are picking up the slack. But just to go back to the ECB very quickly, I think they have to not be complacent, because wage growth is slowing. Inflation is a lot closer to target than, say, the US. And I think they really have to move lower, obviously, early next year, because they might, if they're too slow, they might miss the train. Then they have to do, more and more. So, but to answer your question, I don't think. Sorry, I digressed a bit. To answer your question, I don't think the France situation is really going to move things.
No, it was a good point about the wage situation as well, interesting. Okay, quickly, let's get on to the week ahead now, because we have more central bank decisions to come for the Scandi banks, but interestingly, for the Bank of England ahead of its, I put October, it should be November, shouldn't it? Because it's next week, November interest rate decision. Ryan, being a local as such in the UK, what are your views about the current state of play for, and you can keep it as brief as you like, about not just about the Bank of England, but just about the UK and where it's sat at the moment? We've seen sterling been beaten up a bit, really, so it's going to be quite interesting to see how the bank, again, just handles itself ahead of a budget.
Yeah, keeping it brief is the hard part, because we all want to have a rant about this. We've been saying it on prior shows here. This hasn't been looking good going into the budget. Things haven't been looking good. I think the Bank of England are in a difficult place. Are they going to have a little bit of a sort of placeholder meeting, kick the can, get over the budget and see what's coming from that? Or do they think they've got enough news coming from that might form part of their decision? We are expecting unchanged next week. As usual, the vote decision will be pretty important. I think you're looking around a 6-3 for a hold. The danger is whether it goes a 5-4 and just indicates they're very close to a cut. But yeah, we obviously get the updated forecasts, which again, how much are they going to be worth with the budget coming as well? So yeah, I'm in two minds about how much they give us really, and whether they just want to kick the can and find out what Reeves is up to.
Well, it's not really in their interest to start getting ahead of the budget. Well, they don't anyway. They don't. They try and they play the hand they're dealt effectively in terms of politics and fiscal policy. So it would be a surprise if they commented too much on that or the effects of what the budget may bring, because for as I know, they don't know what Rachel Reeves knows.
Oh, no, I don't think they're going to make any mention of it. But no. They're going to be talking about it, behind closed doors.
Absolutely, and so they should. But the vote split itself, then, does this show again, like we were talking about with other central banks, just a healthy discourse, or is there a sort of schism forming within the MPC about those that really aren't happy about the level of inflation and where it's sat, and are uncomfortable with having to look at cutting rates again? Or do you think that it's starting to stop with the slowing of growth? Do you think we're starting to see just more emphasis maybe on they should be cutting again before year end?
Stelios, you want that one? Or?
Yeah, well, first of all, I want to say that the vote split in the BOE has traditionally been a lot more pronounced than other central banks, which is good. I used to trade sterling derivatives quite a few years, and I was a market maker. And I remember back in the 2000s, there was both sides of the argument always, which is great. Now, in terms of the interest rate decision, we have to remember it's also inflation report month, which is a quarterly one, and that's always important because that's usually when they tend to make moves or shifts in policy, etc. So something to keep an eye on. But I think the split, theoretically, is going to be 6-3. But there could be a surprise in terms of, like Ryan said, maybe 5-4. So, and that will show that they're ready.
Yeah, absolutely. We have again other central banks, the Scandi banks. There, do you guys? How much do you look at the Scandi currencies, and do they play an important part in your portfolio of traded sort of pairs out there? Ryan, we'll start with you.
We keep an eye on them because some of these central banks have been moving, faster than the Fed and the ECB and some of the others. So it's always good to keep an eye on these banks just to see what things are affecting their economies, because then you can get an idea. Maybe that's going to translate into other economies as well. And for all these banks that have got rates now at sub 3%, it's going to be important to watch them. So this is them, the ECB, the Bank of Canada, to see what they are going to do. Are they actually going to find a neutral level where they can pause at, or are they going to keep going? So I think some of these central banks are a good blueprint for what the majors may do, because if they're seeing disinflationary pressures and it's coming because of broad global effects, they're all going to catch the same cold, and they will then be a good indicator for what the others do as well.
Okay, so they are something you'd pay attention to, and you obviously keep an eye on in the big scheme of things. Stelios, is that the same for you?
Pretty much, yes, especially Norges Bank, because I like trading the Norwegian krone. On the other hand, they are a central bank that keeps selling their currency to balance things. So heavy influence in terms of the currency on the central bank. But I do look at those because sometimes these pairs can be the canary in the coal mine that shows you, change in direction in certain things.
Okay, I've got a note here from ING. It says on Riksbank, strong growth to keep easing out of the picture. Riksbank and the ECB are both in a good place. However, the risks that rates will be lowered again in Sweden are even lower than in the Eurozone as the growth outlook continues to improve. Riksbank already took rates below 2% in September. So those factors in play as well. Right, just cracking on as we get near the end of the episode. We've got RBA as well, and this is a funny one for me because you look at the RBA situation, and I sort of often read a number of sort of analyst pieces, and they seem to get it wrong more than they get it right sometimes. And there's a bit of criticism over Bullock in that. What do you think of the RBA? Again, is that something you would actively look at? Stelios, we'll start with you.
I don't really trade the Aussie that much yourself, but I obviously do look at what the RBA are doing. I mean, they're expected to keep rates on hold, right? If I'm not mistaken.
Yes, I think through to the year end, I think, if I'm right.
Yes, I don't really have a view on them, so I think we might just pass it on to Ryan if he has anything more interesting to say than I do.
I don't know about more interesting, mate. Yeah, I mean, well, Bullock made a rod for her own back this week, didn't she? She said if inflation core mean, or whatever it is, the trimmed mean core thing, jumped to something like 1%, that would be something they'd need to look at, and it did exactly that. So I think they're definitely on hold this meeting. Bit of a similar position to the Fed. You know, they would like to get rates down, but the data isn't giving them the leeway to do so. And Bullock has been far more hawkish since she came in at the RBA than a predecessor. So we've always got that to look at, that she tends to take a more hawkish stance than dovish.
Yeah. Okay, cool. I just want to round up on the lack of data that we've had. Obviously, we're becoming the second longest shutdown now in recent history for the US federal government. And we have to pick up what we can in terms of data and evidence of economic activity out there. We got ADP employment change. Now that's, again, there's more emphasis now and more interest in what happens with this number. And would you play it? Because in the past, everyone sort of poo-pooed it and just said, it's ADP, and they trade it for the moment, but they don't trade it in any reflection of what it's likely to show on a national picture. Ryan, will you look at this more keenly than you might have done otherwise?
Absolutely. I mean, always look at ADP because it comes usually 2 days before the NFP and it moves markets. There's no two ways about it. It is a pretty big survey, pretty much of the private sector as a whole. And, as you said, it's the only data we're going to get close to the NFP type data. So, yeah, it's going to be a big market mover. But I'd also point out the Challenger Grey numbers as well. I think will be out on Wednesday or Thursday, I think, because we've heard of a lot of layoff announcements. UPS 48,000, Amazon 14,000. So I think that report could be a bit of a big one this week or next week.
Yeah, good point. Stelios?
Well, very straightforward answer from me. It's going to be important. We used to joke about the ADP being the opposite of NFP, but I'm definitely going to be watching that because it will move markets.
Yeah, just give impetus for trade. Well, listen, guys, thank you very much for your participation today. Your contributions have been very gratefully received. And I will put up where people can find you guys. But just thank you, Stelios. Thank you, Ryan, for taking part today.
Thanks, mate.
Pleasure, mate.
Awesome. And for anyone who missed the start of this episode, you can find us on X, on Facebook, even LinkedIn and YouTube, or all the podcast platforms there, likes of Apple, Spotify, and Amazon Music as well. Again, thank you to my two guests, and thank you guys for listening. Have a great Friday, and we'll see you again next week. Thanks for tuning into the Live Squawk podcast. Your edge in the market starts here. Subscribe now.